The global momentum toward adopting nuclear energy is reshaping the landscape of energy infrastructure, and this shift is opening up exciting new opportunities in uranium mining investments. But here's where it gets controversial. While nuclear energy is gaining acceptance worldwide, the path to more efficient and smaller reactors raises questions about supply chains, political will, and long-term sustainability. Take the United States, for example. The country is moving towards deploying smaller, more advanced nuclear reactors that rely on uranium with higher enrichment levels. This trend is expected to significantly increase the demand for uranium, offering bright prospects for mining companies and investors alike. According to a report from the Wall Street Journal, the Trump administration aims to accelerate the licensing and operational startup processes for nuclear power plants. Smaller reactors aren't just more affordable, they also promise quicker deployment, addressing urgent energy needs more efficiently than traditional large-scale plants. This shift is not just about new technology, it's about changing the speed and economics of nuclear power development. Another critical driver behind this surge is the growing energy appetite of cutting-edge technologies like artificial intelligence, AI. Massive data centers, run by tech giants known as hyperscalers, are driving electricity demand beyond what current grids can sustainably support. This energy shortfall highlights nuclear power's potential role in providing reliable, large-scale electricity generation to fuel digital innovation. As uranium demand strengthens, the ripple effects on mining companies become evident. This is where investment funds focused on uranium miners come into the spotlight. The Sprott Uranium Miners ETF, URNM, gives investors a diversified stake in companies of varying sizes, from large established mining conglomerates to smaller, more nimble operations. This diversity helps spread risk while capturing growth across the uranium mining ecosystem. URNM tracks the North Shore Global Uranium Mining Index, featuring firms involved in every stage of uranium production: mining, exploration, development, and extraction. Uniquely, the fund includes physical uranium holdings and related royalties, offering an added layer of exposure beyond traditional equities. For investors seeking to amplify their potential gains and risks, the Sprott Junior Uranium Miners ETF, URNJ, offers a focused play on smaller emerging uranium miners. This fund follows the Nasdaq Sprott Junior Uranium Miners Index, which primarily includes mid, small, and micro-cap companies engaged in uranium mining. The inclusion of mid-cap firms provides some balance to the heightened volatility typical of smaller companies, creating an interesting dynamic for those willing to navigate more choppy waters in pursuit of growth. Choosing a fund like URNJ also streamlines the investment process, eliminating the need to painstakingly research individual junior miners, which can be a complex and time-consuming endeavor for retail investors. This trend toward nuclear energy and the correlated growth of uranium mining investments isn't without debate. Questions remain about the environmental impact, geopolitical risks, and the long-term sustainability of uranium supply in a world rapidly embracing greener energy. Should investors jump on this bandwagon now, or are they overlooking significant challenges ahead? Share your thoughts. Do you see nuclear power and uranium mining as a future cornerstone of clean energy, or a risky bet in a volatile market? Before considering any investment, it's crucial to carefully review the fund's goals, associated risks, fees, and expenses. Obtaining and thoroughly reading the prospectus is essential for understanding these details. Remember, past performance does not guarantee future results, and investing in funds with a focus on smaller companies typically entails higher price swings. ETFs offer the advantage of continuous liquidity, allowing investors to buy and sell shares throughout the trading day. However, high portfolio turnover within these funds can lead to increased transaction costs and tax implications, factors that can influence overall investment returns. Sprott Asset Management USA Inc. serves as the investment advisor for these ETFs, with Alps Distributors Inc., a registered broker-dealer and FINRA member, acting as the distributor. It's important to note that ALPS is not affiliated with Sprott Asset Management. For those interested in broad exposure to various mineral and mining sectors, Sprott offers a variety of ETFs beyond uranium, including funds focused on critical materials, lithium, copper, nickel, and gold miners, along with physical bullion funds covering gold, silver, platinum, and palladium. These options provide additional ways to diversify within the resource investment space. In summary, the drive toward more efficient nuclear energy solutions is creating compelling opportunities in uranium mining, but also ignites critical discussions about energy policy, environmental impact, and investment risk. What's your take? Are uranium miners the smart play for capitalizing on the nuclear energy resurgence, or do the risks overshadow the potential rewards? Let's get the conversation started.